So you guys thought that F1 is here because of Singapore. Well, actually, it was brought to you by some of these very people on this stage. You see, exchanges are the absolute heart, and in many ways, the brain of the crypto industry. While the protocols get a lot of attention, what's actually driving user adoption are these exchange platforms, these global, extraordinary, complicated businesses that are dealing with umpteen issues at any given time. And that's in a good market. Now we're in a bear market. So to discuss this are these four extraordinary people, senior leaders at some of the biggest exchanges in the world of various different stripes, and we're going to ask them everything. So Constance, let's start with you. FTX has made a lot of headlines, M&A activity, adding new regimes and new jurisdictions all the time, new types of markets. What makes you most excited to wake up every day?
Sorry, I didn't hear the last part of the question.
What makes you most excited to wake up every day as COO and co-CEO, I believe, of FTX?
Oh, I'm just in generally love what I'm doing. So it may sound artificial, but I love my company. I love my job. So I just excited about working for FTX. And in general, as from the business angle, we are really excited to build out more products, to improve our current product, and also come up with new strategies for new markets.
How many users do you have today?
Globally, if we don't count our subsidiaries, it's about 300 people. With subsidiaries, it's about less than 500 people.
In terms of number of staffers, in terms of how about in terms of users? How many registered users are on the platform?
We are so global and US together is around 9 million users.
9 million users. Okay, and these 9 million users are trading more than $1 billion of crypto. Is that correct?
Collectively, they are trading about $18 billion every 24 hours.
That is pretty impressive. So it's a major business here. And you guys have gotten into a number of different markets. But I want to talk a little bit about Deribit. So you are, I believe, the largest options exchange worldwide. Is that correct?
That's correct.
That was not much of a market until a couple years ago. What made first your organization build this options exchange? And do you see that options are going to be an increasing player as an asset class, I should say, within crypto?
Yeah, so we are not, I think, like my neighbors here, we are a little bit niche. We started out in 2016 with the belief that the options would be growing exponentially. And in 2016, no one cared. It was too volatile. No one knew how to price it. So we started doing like mainstream stuff, funding the growth of the option space. And over time, 2019, it really started growing. You had like proper market makers focusing on the...
And this is 2019, which was essentially a bear market too.
Yes, but so what everyone keeps on saying, the institutions are coming and all of that stuff, the institutions started to come in 2019 with their dedicated digital assets funds and those kind of stuff. So hedge funds, small stuff, but not the same as the crypto native community that traded it before. So 2019, you saw more commitment, especially from the traditional space, moving into crypto, starting to do the stuff they knew, which is what we do. We offer options and futures, and they're less familiar with the perps. So the funding angle creates a bit of a difficult to predict P&L, so they prefer futures, which is like fixed, and options. So 2019, we really saw big growth, which is tiny when I think when you look at overall potential, but we saw steep growth, and that attracted...
How was 2021? 2021, worth mentioning for context, we saw extraordinary growth in overall crypto market cap.
2021 was our best year, so 2022 is worse than 2020.
Well, I was going to get to 22 in a minute.
Yeah. So 2021 was like overall peak, so we reached like 22 billion in open interest. So in the option space, we are massive. So we are 90% of the market approximately, and back then we were approximately the only one. Now there's more and more firms joining. We still have a big market share, but over time that's expected to decrease. But so peak was 22 billion in open interest, which is massive.
Absolutely. And so now this year, 2022, we've seen, of course, November 21, we saw Bitcoin hitting around 68,000 US dollars. And since then, we've seen that to some extent, and I want to ask all of you about this, there's been lessened interest and lessened volumes, even in spot markets right now. And it, to some extent, tracks how much I think you guys would know Bitcoin price. How about the options market?
The option market benefits if there's momentum, as in the merge, for example. It's a great storyline for options. Because if you believe in the merge and the potential, and you buy call options, it's a bet on the merge and the potential outcome. So we saw the flippening everyone's always talking about happening in the open interest and the volumes in ETH. So BTC used to be this big and ETH like this. It's now the other way around. We have 7 billion in ETH now and 6 in BTC. So 13 overall in options today, but more in ETH. So as long as those storylines happen.
So you've seen a flippening on the options market
in open interest as well as volumes. Yeah, so that's like since
That's a big story, folks.
Yeah,
okay.
It's quite special. So we never saw that before. It resets almost, but never actually saw it happening until like 2 months ago. But if the market moves, if it drops, if it rises, as long as there's volatility, the options markets benefit. So we see volume.
Yep.
If it's boring, we are impacted because then you trade less options.
So OKX, of course, became famous as a spot exchange. There's a number of different products at this point that OKX over time has able to unveil.
Yeah.
How have you seen interest track Bitcoin price?
Interest track on the Bitcoin price. So
Interest, trading volumes,
trading
user
volume.
signups.
I think, yes, there's a bearish market, obviously. And that's, if you compare with the previous bullish gold rush years, obviously the user growth in terms of Bitcoin or in terms of ETH is a lot, of course, it can compare, right? But given that the exchange has already built different kind of product suites, so the correlation between the Bitcoin prices versus the user growth and also the trading volume is not exactly that positive, meaning that we are using the other product to retain the users. All other product, not just tradable product, but also other
so you're using this winter, so to speak,
Yeah.
to not hibernate, but to actually build stickier and stickier product suites. Is that correct?
Yeah, because previously we built tradable product like derivatives, options. It's mostly directional trading product, but we spend a lot of time to staking, earn, saving type of product that allow the user to earn passive yield. That part we can retain user. We make user the tension of the user.
Well, BYBIT was born in the, I'm going to call it, last days of the bull market to some extent to 2018, around in March, I believe.
Yeah.
And you, of course, are one of the very few, in fact, several of you here are, people who survived the last winter. In fact, did quite well. What would you say is the top lesson you learned last time around that led you to be able to build the global firm you have today?
Yeah, so when it comes to winter and beer market, we're extremely comfortable. That's our home ground. Actually, in terms of BYBIT, when it comes to beer market, we can't wait because when the bull market comes, talent acquisition, all of that becomes extremely expensive. So when the beer comes, of course, you want to focus internal. We've been expanding like massively during the bull market. Our staff increased from I think 800 to 2,500 during the bull market. So it's
2,500 people.
Yeah.
Were they compliance officers, customer support?
Pretty much all field, you know.
Okay.
So you know, you really want to build the leadership team and making sure internally is lean and all that. So that's the beer market we focus on. But it's also the perfect time to focus on building the product. So we also launched a few products around the Ethereum merge, you know. We've launched option market. so you know, we're getting in more spaces and our product line has been increasing ever since. Yeah.
Okay, so in many ways we've seen, at least it seems to me, that with the exception perhaps of one, we're seeing these other exchanges maybe go from one niche and grow into others. You're expanding horizontally, not dissimilar from the way Wall Street banks once did for Glass-Steagall, right? So let me ask you this. You guys are probably the people pushing decentralized technology more than anyone in the world. You are sponsoring F1. You are sponsoring many other things at FTX. Thank you very much. I live in Miami, so I get to see it every day, the Heat Stadium. You're driving decentralized technologies. But you guys, in many ways, are quite large centralized companies. Is that an issue for any of you that you wrangle with? Anyone can answer.
Me?
Yeah, go ahead.
Oh, sure. Interesting question. Yeah. Despite the fact that we are a centralized company, all of our system most of our system is centralized function. The matching engine is centralized. A lot of features are centralized. But we are also having the vision that not just OKX, but we, the industry, need to build the economy with the decentralized technology. So it's not about the intention. It's about we need to help to drive the technologies forward. But the current technology is not, the decentralized technology, blockchain technology.
You can't use decentralized tech to do order matching in the way you want to?
Yeah, for example, if you're talking about building a risk engine or liquidation engine within a blockchain tech, it's too risky right now because it's too slow. We talk about latency sensitive, very latency sensitive in order liquidation order in a highly volatile market, in a highly leveraged market. So you need to execute fast in a very latency sensitive manner in order to make sure your market is protected. So we need our tech, the blockchain tech, to be reaching certain level. Then we're gradually moving a centralized component to then decentralized tech.
So we're speaking here, of course, to, I'm going to call them fanboys and fangirls of this technology.
Yeah.
But again, I've heard another reason or rationale, I should say, for the centralized nature of your firms is that you're kind of forced to from a regulatory perspective. Is that true, Constance?
Well, I don't think that's the right angle of looking at this centralized, decentralized thing. Overall, what are we trying to achieve here? We want to improve the product efficiency. We want to improve the capital efficiency. We want to overall the trading experience becomes more diversified and overall better. So centralized exchange, like what Lennix said just now, we're able to provide the fast speed that decentralized exchange, if you write all the order matching engine, risk engine, liquidation engine on chain, then it's going to be really, really slow. So is that something we really wanted? And also, I think regulation is always the quote-unquote concern of this space. I don't think it's when people say, I have to go decentralized because of the regulation concerns. So exactly what regulation concerns are you talking about here? Are you talking about the safety of the assets? You can use custody, right? Are you talking about the customer identities, or you are just trying to avoid doing KYC here? So there's a lot of...
fair question.
Yeah, it's a lot of rah-rah around this decentralized and regulations. So from our perspective, we think whatever that is good for user experience and whatever that the customer wants should exist and should be improved. So we actually really support decentralized ecosystems. Our FTX Ventures Fund invested a lot in layer 1 technologies to improve the throughput, the speed, the mass adoptions of these technologies. But if we are really talking about, so this panel is exchange panel, and if we're really talking about moving order book exchange on chain, it's not there yet because none of the chain, even they can be really fast, they cannot match the centralized exchange efficiency. And going backwards is not what we want.
Okay, I would call that an impassioned defense for centralized exchanges.
No, but of course, I think it's based on user needs. So decentralized exchanges and also decentralized borrow lending pool is great for this market. And from our perspective, I think it's a hand-in-hand relationship. We grow, centralized exchange grow, we offer a place for people to trade the decentralized tokens, which help that grow.
All right, so let's talk about the traders for a moment, because at the end of the day, all of you have constructed your businesses to be an optimal environment for the actual traders trading real, valuable digital assets through your platforms, right? I'm sure it's something you spend a lot of time thinking about. Is that why you've built your exchange the way you have? Why is BYBIT designed the way it is today?
In terms of our infrastructure?
I'm going to call it market infrastructure that you've developed internally, and even customer support. I want to get to that too.
Yeah, so I think, first of all, if compared to any traditional exchange, crypto exchanges are extremely different. For example, BYBIT, since the day we launched until now, we haven't gone offline for a single second. That's because you just can't afford to go offline to do a full day or a few hours of maintenance. So all of the kind of updates, all of that is happening in real time, hot patches, great releases and all of that.
As opposed to the New York Stock Exchange taking vacation every evening.
Yeah, so that's one of the industry what requires the exchange to do. And of course, the people on the exchange servicing the staff, servicing the customers are 24/7s. So customer support, all of that. It's simply because the industry is extremely fast. Right. So I want to actually touch on the subject on previous about the whole Web3 and decentralization. From BYBIT perspective, I think we are an exchange. We provide infrastructures. wherever the clients wants to go, where the bus, where the car, where the road, right? So we actually don't have a taker preference, and actually we want to take an approach to really embrace Web3. So BYBIT is actually really kind of, our job is to innovate and to make sure that we are connected to all these decentralized apps and all that. So we are going to push out our mean user interface to connect directly to decentralized trading engines, sites, and all of that. So this is one of the initiatives we're trying to push out. Yeah.
You know, traders very often trade wherever there's pre-existing trading volume. Perhaps I'm asking the wrong crowd here, but are you people, the pre-existing exchanges where trading actually happens, do you have a moat against new competitors? That is to say, do you think it's possible that other large exchanges could come in and eat your lunch?
Do you have a what?
Could other large exchanges, new entrants, come in and eat your lunch? Is it
That's
possible?
great. I mean, come on. Like a lot of people are saying like, oh, yeah, FTX. How do you think about Binance, BYBIT, Deribit, OKX? Come on. Crypto is damn small right now. Let's face it. We cannot fight among each other. What we can do right now is to collectively grow the space. If they're newcomers and if they're targeting a unmet market need, that's fantastic. Why are we afraid of that, right? To collectively, eventually, how we make money, how we all make money is by growing the space, not by fighting against each other. So I think this is true among the centralized exchange and also between centralized exchange and decentralized exchanges. So we want to see the space to grow, not fight with each other. So to answer your question, if there's newcomers, awesome.
And so you're supporting them. You're giving
Of
them the
course.
roadmap.
We have to.
Yeah, because you're growing the pie.
It is.
Love it.
Yeah.
It is.
Is that true even in a space that you dominate with 90% of the market?
So for us, it's a little bit different. We focused on the options niche, and then all of these guys came in and started focusing on the options as well, or at least tried to, which is it's actually great in growing the pie. So if you look at our product focus, options is massively traded in the traditional space, and in the crypto space still has to grow. So I think the next growth explosion, or at least that's what we believe, but we might be a bit biased, will be options. So all of them with a significant base, because we are different. So answering your previous questions, what is the infrastructure choices you made, which are different? The options focus has forced us, or we chose to purposely create a different setup than many others. For example, we're not cloud-based. We have dedicated hardware in multiple racks in London. Clients can cross-connect to us to put their server in our racks. We can connect to their racks. We have a lot of traditional players, the big market.
Well, actually, I want to talk about that too.
No, but so that's the choices that are different from these other guys, because the latency argument for us is different. If Bitcoin moves, their clients need to update 2 quotes, a bid and an ask. For us, there's hundreds of linked instruments that move at the same time. So if you want to update hundreds of quotes because of one tick in the underlying, it needs to be fast. So if you process risk checks order by order, and you send 1,000 updates, and every update takes, let's say, a millisecond, we're looking at a second.
You need to have a really fast service,
Yeah, really.
among other things.
Yes.
Okay, so let's talk about institutional traders. I think this has certainly been one of the stories. You mentioned that even in 2019, we saw real institutional money coming into the space, and that does seem to be the case. Has it been a double-edged sword? I just want to ask this question. That is to say, because of that, so it seems, and this is an argument I read about in the newspaper, when stock prices drop, Bitcoin price drops, altcoins drop. Is that true? Is that going to stay that way? And is it because of institutional money?
It's relatively true to some extent.
The correlation look like that. We can see that even in a short-term level, in certain level, the stock price still have positive impact. I think maybe if the leading indicator, the price of the equity price drop, then leading the Bitcoin price. But in some extent, no. For some event, crypto-related event like Ethereum merge is actually leading the market back. So I don't see. They're getting a lot more positive correlation between equity market and Bitcoin market, but whether or not it's because of institutional money or whether or not it have one-to-one correlation. I don't see from a data point of view. So, yeah.
Totally agree with that. I think overall, institutional money flow, inflow is one factor. Another factor I also recognize is Bitcoin and crypto assets has become a more recognized asset after the past 3 years. So instead of being an isolated asset and isolated tiny little markets, well, in fact growing. So it definitely has to be having some correlation with the traditional markets. So it's impossible for an asset to be a real asset without having some sort of correlation with the economy and the traditional stock markets.
Well, then let's talk about macro. I think that's actually a fantastic pivot. So we've obviously seen that inflation is happening almost entirely worldwide. We're seeing multiple different jurisdictions entering recession and even claiming it. The US has yet to do so formally. But it seems to be having an impact certainly on equities and a lot of other asset classes. Do the tailwinds of this macro environment, do they scare you as entrepreneurs who are responsible for many people's jobs within this industry, and in many ways, as the linchpins of this industry? Is macro scaring you?
I don't think so. Why should we be scared? I mean, come on. It's just all cycles. When there's economy, there's cycles. When you are running the business, you have to acknowledge cycles. And it's like the traditional economy probably takes 5 to 10 years for a cycle, and crypto takes about 3 years for a cycles. When the cycle's down, we build. We take more time to build. When the boom market comes, we harvest, or there's just a million of crazy things going on. So I think we really need to think about is put our perspective to a little bit longer term to think about what's going to be the needs that's not arised yet, and whether we can build that needs now and offer to the customers and telling them, okay, this could improve the overall efficiency. So that's how we feel about it. But of course, I think everyone's sort of a little bit upset by the economy, but I don't think we should be scared.
Do you see this as opportunities, the economic environment?
Yeah, I think this is why we're all here, and this is why I'm extremely bullish. It is the inflation, is the COVID caused all these governments to print out fiat relentlessly and causing this whole problem. And people, I think, are simply chasing for store value. And when crypto becomes alternative, I think previously it wasn't an alternative. When the magic internet money is about and no one is really controlling it, I think it offers an alternative, and this is why this expo is so many people compared to all these traditional ones. So I think this is why we actually exchange, like we said, is the kind of the gate and gateway to bring people to this new world, where we want to focus more on building things. And I think this is all of us here are for. Right?
So to that end, when you're trying to introduce new people to it, education seems to be the key. Each of you have your own initiatives, actually, as it turns out, which is pretty fantastic, to educate either newcomers or new types of traders, people who haven't been in this market before. Could you highlight maybe one of the things that you're doing to help teach more people about this industry?
Yeah, so for us, I think we're different than our peers. We can't put our logo on a race car because our product is quite advanced. It's more sophisticated, so we have targeted client activation, which is also targeted understanding of the product.
So are you indeed educating traders?
We launched like an options course, which is like 30 chapters and 35 hours of YouTube explanations of what is an option, the basic stuff, the Greeks. We invest quite a lot in making people understand what the products are, what they do with the risks, and try to, if a person buys an option and it expires contrary to what they expect, they will never trade again. So if they lose money, it's not a problem, as long as they understand why. And for a purpose, simple. You buy a perpetual, it's a certain leverage, and the only thing that can go wrong is the direction. So the coin went in the wrong direction. But for options, you might buy a call option, and the underlying goes up, while volatility goes down, and you actually lose money while you pick the right direction. So people need to understand the optionality is different. So
and they've got 35 hours of YouTube to learn about that, which is fantastic. But OKX, you guys, just worth noting, you guys are putting your logo on McLaren cars. So what else are you doing beyond that to help teach newcomers?
Yeah, McLaren just implies that crypto player, a serious player currently, that we can cooperate with the top brand, the biggest brand in the world, Man City, McLaren. We become, I would like to represent industry that we are a serious industry. So echo to Luuk that we actually spend a lot of time in actually giving a very comprehensive educations of a really high-end financial product. For option, I read a lot from the Deribit content. It's great content. It's like we are doing a good thing for investor education that no countries ever did, no other industry has ever did. So not just on crypto-related trading with financial product education, but we're teaching, having great content and teaching Web3 technology, all kind of blockchain technology. So education is like one. I think all of the platforms spend so much effort on even a dedicated team just to build an educational content for our users, for our educators. Yeah, and it's not making any money, I'm very sure, but it's teaching, it's education in different language.
In different languages.
Of course. Yeah.
I mean, I think all of us focus quite a bit on education. We all have an education page, and BYBIT is also very sophisticated. But I think as a good exchange, our job is to make this extremely sophisticated product so easy to use and straight out of the box, like an iPhone. You don't need education; you simply can use. So it's our job to make our product so relatable to retail, and so we can bring them a mass adoption ready product. So again, on top of all the education seminars, all these things, I think focusing on the product, polishing it, make it adoption ready is our job. Yeah.
So what's not adoption ready yet? So I want to ask this question. Right now, most of you guys are trading some sort of sophisticated digital asset, but very little is being traded in the security token market. Now, we certainly know that many companies have been pursuing licenses or exchange licenses, ATSs, for example. We've seen a few issuers come out with security tokens. Do the four of you believe in security tokens? Is that the future?
I think the future is what we're doing 24/7, and the idea should be whatever it is should trade 24/7. There should not be a need to trade 9 to 5. There should be why close on Saturday, why close on Sunday. Every region has its own trading hours, whatever. There should be, if you want to buy a stock, a Bitcoin, or whatever the product is, I think it should be. So I think the answer is it's irrelevant whether it's a security token or not. It should be 24/7 without downtime, with proper liquidity.
And clearance and settlement instantaneously, I'd imagine?
Yes.
Okay. What do you guys think?
I still a strong believer in security token just because of one reason. Because of what we call the functionality of a stock. Because right now, I'm not sure, because I'm coming from Hong Kong, if you buy one lot of HSBC sanctions, it actually costs a lot of money. So so we need to kind of like split the big lot in the tiny little bit, but the price and the spread is actually very bad. If for a retailer, for a really small player, if they want to participate in certain exposure, we construct a really sophisticated portfolio with meaningful diversification, with really little money, you cannot do that. But with the adoption of blockchain, which is security token, we tokenize the stock. So we immediately increase the fundamentality of the token, of the stock. So it substantially drives down the settlement cost of the penny token, of the tiny little bit token, what you call the penny token. So it would be might be possible. Yeah.
So much capital.
Trading 1/10 of a lot with blockchain tech, settle in blockchain, it would be a lot easier. It would be a great improvement for security infrastructure. That would having a great improvement for the transparency and the liquidity for the stock market. But of course, we need a regulatory approval, endorsement, and upgrade the entire brokerage system.
What's a misconception of your exchanges? What questions do you receive sometimes from the general public that make you think that perhaps they don't understand your business fully?
So a lot of people ask us why we spend so much effort on regulations. I think this is how I think about this. I also mentioned this in my panel yesterday. If anyone happened to hear it twice, please bear it with me. I think we are spending so much time and energy to talk to regulators because we deeply believe that for this space, for crypto space to go bigger and go for mass adoptions, we need the support from regulators, and we need the support and the flows from the traditional financial markets. Without them, it's just going to be tiny. And we think this, without a comfortable legal framework or regulation framework, the traditional money will not be comfortable coming in, and mass retail will not be comfortable of putting their money or using crypto. So that's why we spend so much time and energy educating regulators. That's actually
Maybe we'll show them the same courses you teach brand new people.
Yeah, we have a quiz that is targeting the DC people about how much they understand crypto. But my point is, we spend so much time. It's not because we think that we need to get the license. It's because we think that if we don't spend much effort educating these people will forever not gonna understand what crypto is. Without them understanding crypto, they are unable of coming out reasonable legal framework or regulation framework. Without reasonable legal framework, there's a lot of adoptions will not happen. For example, TON, the Telegram token or Telegram protocol is great. And in the mindset of building the super app, how about we put USDC inside the Telegram? Boom, everyone can send money around. But then the regulator will ask, why are you sending money across the border with no one doing KYC? So I think that's our perspective, that we want to push the regulation to be set up properly and reasonably so the entire space could do bigger. So that's a lot of questions the common question that people ask us.
Okay, so a misconception, FTX talks to regulators too much, but now we know why. Any other misconceptions that we should clear up? We've got all of these people here.
I think one of the common one, at least we get, is liquidation is caused by the exchange or rigged, all these things. I guess for at least all the major exchanges, we're actually connected with all the top market makers, institutions, you name it, Jump, Tower, Hudson River, all these guys. So a lot of these volumes and open interest and the things are happening, and we're pretty comfortable.
You're not trading against your
we're pretty comfortable making the flow, and the business model is pretty sustainable. And just imagine when you can make a sustainable cash flow on that way, nobody's going to try to mess with it. But this is one common kind of misinterpretation.
Okay, so the exchanges are everyone's friend, even if you lost money. Makes sense.
Not every exchange.
What's that?
Not every exchange.
Not every exchange. Okay. Let me see. I do want to talk about stablecoins, and we have 44 seconds, so let's do that. Some of you have even issued your own stablecoins. Many of the rest of you are working very closely with some of the largest stablecoin issuers. This has tended to be one of the biggest topics that regulators are talking about today, maybe just because they can really put their hand on it. One of the big problems that we saw in 2017, 2016 was without a real stablecoin out there, there was no outlet, no trading venue for traders. To what extent are you guys trying to support the stablecoin issuers out there today and working to educate regulators and policymakers on stablecoins? Does BYBIT do this?
Yes, we actually announced a partnership with USDC. Majority of our volume happens on USDT currently, linear or derivatives. USDC is a new partner we signed up, and we're actually going to bootstrap the USDC ecosystem. We're actually the first one to provide them a USDC linear option market. On top of it, we are bootstrapping our USDC marketplace in linear contracts and all that. So for us, we actually just want to make sure we embrace the major choices of the market, of the clients, whether it's USDC or USDC. Yeah.
And do we need more stablecoins? It's my last question.
No, if it's up to me, no. I think preferably there would only be one. But there's one small thing which is perhaps interesting to note. If you settle an option like they do, it's linear. It's like $100 P&L. It's 100 USDC, whatever you pick. If you have an inverse model, which is, I think, perfect for BTC and ETH, but if you have a coin that goes to zero, Luna,
right,
you have to settle $100 in...
We didn't use that word once in this conversation.
Millions of Luna, which is impossible. So a settlement in a coin which goes bust is almost impossible.
Yeah.
So the expansion in let's say, primary coins, where the risk of going to zero, of course, is much higher, can only be done in a linear way.
Okay.
Meaning is using a stablecoin.
So one stablecoin to rule them out. That's what I've just heard.
It makes life easier.
Well, thank you everybody for listening to this extraordinary panel. Panelists, thank you for educating all of us.
Thank you.